Good morning, good afternoon, good evening from where you're watching me from. Welcome back, everybody. Today, I want to take my time to explain to you shortly about a simple concept that most of you guys get confused about. And this concept is supply and demand, the concept of supply and demand, and support and resistance. Most of you guys get confused about supply and demand versus support and resistance. Most of you guys don't know the difference between supply and demand and support and resistance. These two kind of families, you guys get confused about them, so you treat them differently. And because you treat them differently, you always get losing streak because you don't apply the strategies or you don't apply the concept in the right way. You apply the concept in the wrong way. That's why you have a lot of losing streaks. So today I want to take a very short time to explain to you all about supply and demand versus support and resistance. They are completely different, guys. Supply and demand and support and resistance are completely different. So don't apply each other in different rules, okay? So let me just go through the chart and show you some examples. When we talk of supply and demand, it is areas of the charts where the market sold off aggressively or bought aggressively. So you can see that there are some areas on the chart where the market sold off aggressively, like this zone. Can you see this zone? The market all of a sudden sold off aggressively. That is why we call supply and demand. And when the market sold off aggressively, the market also bought back here aggressively. Can you see the market all of a sudden just turned a trend and bought up aggressively? It might be there was a news event or whatever event, or there's a market maker who is making it. It doesn't matter. All what it matters is that these particular zones are the zones that we call supply and demand, not support and resistance. Supply and demand. Market sold off aggressively and market bought aggressively. So when that happened, you mark your lines and you extend it. Okay, here we are lucky that we got aggressive selling and we get aggressive buying, but sometimes you just get only once aggressive selling and you get only aggressive buying. But when we talk of support and resistance are areas on the chart where the market touches multiple times. So market reacted to that particular zone multiple times. So if you can see that there are areas on the chart where the market reacted several times, either the upper side or the lower side. So for instance, you can see that here market reacted several times here. Can you see? Several times around this zone. So this zone becomes support and resistance. Market reacted around this zone several times. So this zone becomes support and resistance. See, because market reacted here, it also came back and market also reacted around this zone. Can you see? Because there was a reaction here. That's what we call support and resistance. We don't treat support and resistance like we treat demand and supply. People think that support and resistance are also demand and supply. Because of that, they apply the rules of demand and supply. If you do that, you're going to have a losing streak. Here, this zone can be termed as support and resistance zone because you don't see any aggressive selling, right? You just see the market reacting around particular areas. This is what we call support and resistance zones, not demand and supply zones, guys. So don't get confused because you can see that the market just is just reacting around particular areas multiple times. That's what we call support and resistance, either upper support or lower. They are all called support and resistance. So support is the base one. Okay, the base one is called the support, the top one is called the resistance. Guys, you don't need to know the names. All what you know is you need to know is the concept. You need to understand the concept, not about the names. So the concept says that the upper one is what? The resistance, because the resistance means that the upper one is the resistance, because resistance means that if you are hitting something and it's resisting you from pushing through, it means that it's a resistance. The lower part is the support. If you are pushing something down and it prevents you from pushing through, it is your support. So that's what's called support and resistance. Areas on the chart where market made some reactions. Okay, where market made some reactions. Can you see reaction here? There's another other reactions. Can you see several reactions around this zone? So that's what we call support and resistance, not demand and supply. Not demand and supply. Support and resistance, not demand and supply. Guys, do you get it? Yes, you can see several reactions around the area. That's what we call support and resistance. But demand and supply is areas where market sold off or bought aggressively. Like here, you can see that the market was ranging. Then all of a sudden, the market started selling off aggressively. When you see something like this, when you see aggressive selling all of a sudden, not that the market is changing the trend, aggressive selling is likely that the market can come back again and react at the same zone. It's like that's what I call demand and supply, aggressive selling and aggressive buying. So when we extend this line, it's likely, I'm not saying it's always going to be like that, but it's likely that the market is going to react again around this zone. Let me clean this line and rather use a very thick horizontal line. Okay, let me use thick horizontal line for you to see. Look at this line. I'm putting 3 lines here, so in case we get to the chart areas where we can see market reacting, then you remember that there's the line we drew. Okay, so actually you can see that the market sold off aggressively, though the trend was reversing, but it was just aggressive selling. That's what we call demand and supply. Supply and demand, not support and resistance. So let's go to the chart. Let me show you very simple examples. I'll show you an example for support and resistance. Let's see another example of demand and supply. So this is another supply zone because the market sold off aggressively. Let's see another example. We can see that, okay, here I've already explained here to you. We can see areas where market sold off aggressively. Good. This zone, can you see this zone? See this zone. Market sold off aggressively. All of a sudden the market was going up. It was like the trend was trying to push up. The trend was trying to push up. Then while the market was reversing, the market sold off aggressively. This zone becomes a supply zone. Okay, demand and supply zone. This zone, can you see? So you draw your horizontal line across, and when the market comes back, you enter. Can you see? You enter your sell immediately. Let me clean this one so they can see. Okay, let me leave it there. You enter your sell. You enter your sell immediately. See, you enter your sell immediately. Sell order at the horizontal line, and your stop loss. Your stop loss behind the pattern. Stop loss behind the pattern, and you take profit 1:2. Okay, don't take more than 1:2 because you don't know how far the market will go. So assuming you are risking $50, you always take what? You always take profit target of $100, guys. 50:100. Don't risk more. Or 50:150. Don't risk more than 1:2.5, 1:3. No, just 1:2. Yeah, okay, because you don't know how far the market can go. The market can drop a little and stop. So here on the chart, we can say the market is dropped, but don't be greedy. Always, it's not going to be like that. So your stop loss 1:2. If you are risking $50, you gain $100. If you are risking $200, you have to gain what? $400. Okay, if your account is bigger, like we professional trader that we trade, your account is bigger, they can risk $500, then always you have to make $1,000 in return. That is what we call demand and supply, not support and resistance. Support and resistance are areas of the chart where the market reacted several times. Like as you can see here, market reacted several times around this zone. So this zone becomes support and resistance. We use them to treat different strategy, not demand and supply zone. As you guys have been using demand and supply zone to treat support and resistance, we don't do that. We treat support and resistance differently, and we treat demand and supply zones also differently. So this demand and supply zone, you can see market sold off what? Market sold off aggressively, aggressive selling. And you see aggressive selling all of a sudden because the market was going up, the market was on an uptrend, it was reversing. Then all of a sudden, in the reversal, the market sold off aggressively. So because of that, we draw your horizontal line there, and when market comes back, you put your sell order just immediately. You don't wait for confirmation. Okay, you put your sell order immediately there, your stop loss behind the pattern, and your take profit 1:2 and out of the market. This is what we call demand and supply trading. Okay, demand and supply trading. Let's see more examples on the chart. Here, you can also see that we also have another supply zone here. Can you see? Good, demand and supply zone. Can you see? Watch. So this, why is demand and supply? Because the market also decided to reverse immediately after a big drop. After a big drop, the market reversed immediately to the other side, which means this side can become our demand and supply zone. So what do? We draw a line there. Maybe one day when the market come back and touch, it is likely it's going to reverse. So let's see. Let's move on. You can see, good. You see, I told you. You can see that the market came back and immediately it reversed. This is what we call demand and supply zone. See, can you see? So why are you supposed to buy? You don't wait for any confirmation, because if you wait for confirmation, your stop loss is going to be very big. Because of that, you put your buy order immediately at the horizontal line, and then your stop loss behind the pattern. So your buy order immediately there, your stop loss behind the pattern, and you take profit target where 1:2, guys. I told you 1:2. Don't go more than 1:2. So if you are risking $100, you make $200. If you are risking $50, you make $100. Okay, if you are a small guy, your account is very small, very tiny, and you want to risk $20, when you risk $20, you make what? $40. If you're a big guy, a little, you're average guy, you can risk $200. Then when you risk $200, then you can make $400. Very simple, guys. This is how we treat supply and demand zone. Don't mix support and resistance with supply and demand. Let's see more examples. So here, though the market went up, 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 but we are taking only 1:2, guys. We don't have to be greedy, okay? 1:2 and out of the market. That's what's called supply and demand zone. So now, do you understand the concept? Areas where market sold off aggressively or market bought aggressively. Let's see more examples on the chart. You can see that this zone to market sold off aggressively. See, market sold off aggressively. Either it was news or market maker job. We don't tell. We can't tell. So we just draw our horizontal lines, and in case market come back, we are not always going to have winning trade, but at least if you have 50 of them to be wins and 50 of them to losses, you're definitely going to be profitable. Let's say within the month you took 20 supply and demand trades, and within that 20 you got at least half of them to be profitable, half of them to be losses. Okay, let's just assume 10 losses, 10 wins, which one is 2 risk reward. You're definitely going to be profitable, right? So why do people lose in trading? Because they don't know what they're doing. They don't take their risk reward properly. They want to gamble. They want to take $1 to $500 million. Because of that, they don't have a system backing what they're doing. So they don't take risk reward of 1:2 or 1:3. They don't have statistics to back what they're doing. Because of that, they earn the money today, and tomorrow they lose all their account and go and sell their father's house, come and lose it again. Go and sell their own property, come and lose it again, because they think they can make the money back and they can never make it back because there's no system backing what they're doing, and they keep losing. So if you don't have any system backing what you're doing, don't do it, guys. Stop losing your money, okay? So you can see that here is a supply zone, supply and demand zone. You just draw it there. Okay, don't confuse yourself with the names, either supply or demand. Whatever you see that whenever you see the market sold off aggressively or bought aggressively, just call that zone supply and demand zone. Okay, don't worry yourself whether this is a supply or this is a demand. No, don't worry yourself about that. Just say that this is supply and demand zone. That's all. But don't confuse yourself with support and resistance. As I said, it's different matter altogether. So, assuming the market came back here, we can tell that maybe the market is likely to reverse. So let's see. Okay, good. You see, guys, I told you. So market came back to the same zone. Can you see? And the market sold off aggressive. This concept works several times if you apply it correctly. Not support and resistance. Support and resistance is a different game altogether. Demand and supply is where market sold off aggressively. Okay, so you can see that the market came back. And it sold off. So where are you supposed to enter? You enter immediately the market touches the horizontal tool. Any horizontal line you're going to use, either trend line or whatever, just touch. When the market touches, then you are in a trade. Stop loss. Why are you supposed to put your stop loss? Behind the pattern. 1:2 risk reward, right? Every day I say it. 1:2 or maximum 1:2.5, okay, or 1:3. But I don't advise 1:3 because when you have 1:3, it's going to reduce your win rate. Win rate and risk reward are always correlated, okay? So just take 1:2 risk reward and out of the market. So supply and demand works if you know what you're doing. So aggressive selling and aggressive buying. But we trade support and resistance differently, guys. Support and resistance, we trade them from higher time frames to the lower time frames. But supply and demand, we trade them differently. So assuming you are risking $100, you are taking $200. Okay, it's very simple. That is what we call supply and demand zone. Let's see if you can find another example. There are a lot, guys, a lot. See this zone. See this other zone. You can see the market sold off. The market bought aggressively all of a sudden, right? The market started buying aggressively at this zone. Can you see? Aggressively. Can you see aggressive buying? So what do? We draw our line here, and when we get to a point where maybe one day the market come back to this zone, here it did not come. As we came back to this zone, we would have bought this zone, but it did not come, so we can't take any trade there. Can you see? We can't take any trade there. Can you see another aggressive selling? This concept happens several times. It can be news, it can be market maker's job, it can be anything. We can't tell, but all what we care is that the market is selling off aggressively, market is buying aggressively. So aggressive selling and aggressive buying. Let's see if the market come back here, it will reverse. I want us to have one losing trade so that I can see, but it's like all of them are winning. They're not getting the losing trade. I wanted to show you another losing trade. Consider here the market came back and started selling. Though the market did not touch, but so we can't enter. As we set our sell limit here, the market wouldn't have triggered us. We wouldn't have been in a trade, though it would have been a winning trade, but we wouldn't have been a winning trade because the market could not trigger us. I said the rule is what? The rule means that the rule says you put your buy order or your sell order just at the pattern, okay, at the triangular to at the rectangular tool or at the horizontal line that you draw. The market will take you in. But here you can see that the market could not reach there. Can you see? Market could not reach there. Because of that, we wouldn't have been in this trade. Though it would have been a winning trade, but we didn't have been. But you can see the market came back again. See, market came back again, and then it touched and it reversed. Can you see? Good. It touched and it reversed, which means here is where you should have entered, and your stop loss behind the part. Can you see? If you set a very tight stop loss, market can take you out and then reverse your position. Always stop loss 1:2. Okay. Don't go for sniper entry, guys. I always say that sniper entry does not work. Once in a while, market can just give you sniper entry, but not that you are planning for sniper entry. Don't do that. Okay. So you take your risk reward 1:2 and out of the market. Can you see? Market came back and reversed immediately. So we have 1:2 risk reward. If you are risking $200, you are making $400. Very simple. So guys, I think we covered enough. I think we all for this example. Or we want more example? You want more example? Let's see. Let's go to the chat and see. Maybe you can get more example. Supply zone, supply and demand zone. Who can tell me? Who can show me something? Who can show me something? Yes, can you show me something? Good. There's another one here. Good. I think this one I was looking at it. That's why I do this line. So can you see? There's another line. There's another one here. So here, as soon the market comes back here, it's likely the market is going to reverse. You can say there's another supply zone here. Another supply demand zone here. See, look at this zone. See what happened. Can you see? You see what happened? So in case the market come back to any of them, we can take our trade. Good. Market came back here, and is it going to be a winning trade? I want a losing trade, guys, so that you guys can see that this strategy can also lose. Okay, this one would have been a winning trade, not a losing trade, because our buy order here behind the pattern at the pattern, and our stop loss 1:2 somewhere here. Take profit targets. Okay, so this would have been a winning trade. This Friday's chart, so it have been a winning trade on Friday. Can you see? This strategy has high probability of winning, but don't put it in your mind that every time you're going to win. Okay, don't say, hey, because set tested and it's winning every time, you're going to win every time. No, sometimes you're going to have losing trade, sometimes you're going to have winning trade. It could be that now you're in the zone for that. That's why it has a lot of winning trade. But what I'm trying to tell you is that even if you're not smart enough and you do this strategy and you get at least half of them to be raised, half of them to be profitable every month, you're definitely going to be profitable. So let's say, as I said, you take 20 of them. Out of the 20, half of them are wins, okay? All the support and resistance, half of them are wins, half of them are losses. Definitely, you're going to get half of them to be profitable, right? Because with risk reward of 1:2, you're going to be profitable. Let's say you risk $100 anytime you lose. So anytime you lose 100. So 100 times 10 of the losses, right? I'm just giving an example. 100 times 10, you're going to get what? 1,000, right? Good, $1,000. And then 200 times 10, you're going to be what? So when you take your profit risk reward, when you do your calculation, you realize that you're definitely going to be profitable. So that will be all for this video. I hope to see you next time. Go to your chart and test it, okay? Go to your chart and test it until you become good with it. So in summary, I say that what? Supply and demand is where we have aggressive selling and aggressive buying, not support and resistance, guys. Not support and resistance. Support and resistance is areas where market reacted several times, like this area, for instance. When market reacted several times, like this area, for instance, have you seen this support and resistance? Not supply and demand. Supply and demand is aggressive buying, aggressive buying. Can you see? Aggressive buying and aggressive selling. That is supply and demand zone, not support and resistance. Aggressive selling and aggressive buying, not supply and demand zone, not support and resistance, but supply and demand zone. So this is always your mentor. I forgot to tell you to like my video. Okay, so if you're watching back to this level and you're my new subscriber, just hit the subscribe button. If you're my old subscriber or my old student, you're my mentee, whoever who is watching me, just like the video, okay, so that the algorithm will put my video through. So that'll be all for this video, and hope to see you next time. Bye.